Hello, everyone. Artificial intelligence is no longer just a flashy buzzword that excites tech enthusiasts. It has become one of the most powerful forces shaping business, defense, healthcare, and everyday life. With that shift, AI-related stocks have quickly captured the imagination of retail investors looking for the next big opportunity. Among the smaller but increasingly talked about AI players are BigBear.ai and SoundHound AI. These two companies are very different in what they do, but both have been climbing onto investor watch lists. Today, we're going to break down what each of them is about, the risks and opportunities they present, and whether either is the right stock to own right now. And toward the end, I'll even highlight two other companies that I believe could end up surpassing Big Bear in value over the next 5 years. Let's start with BigBear.ai. This is a data analytics firm that specializes in working with the U.S. government. Some investors like to compare it to Palantir Technologies, which is far larger and more established. While BigBear.ai isn't anywhere near Palantir's size or scope, its contracts with government agencies put it in a very interesting position. The company is still relatively small, with a market cap hovering around $2.6 billion. What makes it stand out is its backlog of $380 million in signed contracts, showing that demand is strong and long-term revenue streams are already lined up. CEO Kevin McAleenan has spoken confidently about what's ahead, pointing to massive opportunities in homeland security and other government-driven initiatives that fit Big Bear's strengths perfectly. Of course, the recent results haven't been smooth. For the quarter ending in June, sales came in at $32.5 million, a drop of 18% compared to the previous year. That kind of decline can rattle short-term traders. But if you zoom out, the long-term opportunity could be far more promising, especially as government agencies increasingly turn to AI-driven data tools. Another point in Big Bear's favor is its cash cushion. The company holds nearly $391 million in cash and equivalents. In the last 6 months, its operating activities used up only around $10 million, which means it has plenty of runway to keep funding operations while pursuing new contracts. That's an important layer of safety for investors in a volatile industry. Now let's shift to SoundHound AI, a company built around voice and conversational AI. You may have first heard of SoundHound because of its early partnerships in the automotive industry. Its technology powers voice assistants in vehicles. But one of the biggest risks with SoundHound in the past was its heavy dependence on car makers. If auto sales dropped or competition heated up, SoundHound could suffer. That's why its recent acquisition of Amelia AI was so important. Amelia gave SoundHound access to a much more diversified customer base, allowing it to expand into multiple industries outside of cars. With that move, SoundHound's potential market exploded. The company now estimates that the total addressable market for voice AI is an enormous $140 billion, and with broader industry exposure, it's better positioned to capture its share of that pie. The impact of this acquisition is already clear in the numbers. For the quarter ending June 30, SoundHound posted revenue of $42.7 million, compared to just $13.5 million the year before. That's more than triple the growth, driven largely by its new business lines. The company's CFO, Nitesh Sharan, put it plainly, "We're in the middle of a massive expansion in voice and conversational AI, and SoundHound intends to move quickly to capitalize on it." Despite that growth, SoundHound stock hasn't been smooth sailing either. Shares are down about 15% in 2025 so far, but momentum has been building in recent weeks. For growth investors who don't mind risk, this kind of volatility can actually present opportunity, especially when a company is tapping into a market as big as voice AI. So how do these two stack up? Both are early-stage, high-risk investments. But if you look at cash flow and financial runway, BigBear.ai comes out ahead. SoundHound burned through over $43 million in just 6 months, and with cash reserves of $230 million, it faces the risk of needing to raise money through stock dilution sooner rather than later. I also tend to be cautious about companies that rely heavily on acquisitions to boost revenue, as SoundHound did with Amelia. While it's clearly paying off for now, it can sometimes hide the true organic growth of the underlying business. On the other hand, Big Bear already has its government contracts in place, a solid backlog, and enough funding to sustain operations. While it may not be glamorous, its stability makes it look like the better bet right now. Even though Big Bear seems like the stronger option between these two, I believe there are other companies outside this pair that could ultimately prove to be more valuable investments. The first is Diebold Nixdorf, a company that doesn't get as much buzz as AI names but has a strong foundation. This Ohio-based tech firm serves top banks and retailers worldwide with cash handling machines, automation, and software that streamlines checkout systems. It was recently recognized by Time and Statista as one of the world's best companies. Diebold's market cap is around $2 billion, smaller than BigBear's. But the fundamentals are appealing. In the second quarter of 2025, its revenue dipped only 2.6% year-over-year, far better than BigBear's 18% plunge. Even more encouraging, its revenue grew 9% sequentially from Q1 to Q2. The company also has a backlog of nearly $1 billion and has delivered positive free cash flow for 3 straight quarters. That's a big contrast to BigBear, which still struggles with profitability. And valuation-wise, Diebold looks dirt cheap, trading at less than 1 time sales compared to BigBear's hefty 14 times sales. The second name I'll highlight is Recursion Pharmaceuticals, a biotech company using AI to revolutionize drug discovery. Traditional drug development is painfully slow and expensive, with 90% of potential treatments failing in clinical trials and costs often exceeding $2 billion per drug. Recursion is trying to flip that model by using AI to rapidly test and identify the most promising drug candidates. The company already has several early-stage cancer drugs in clinical testing, along with a rare disease therapy in development. While it's still small and risky, the potential upside here is massive. If Recursion can prove its model works, it could reshape the entire pharmaceutical industry. So, where does that leave us? Both BigBear.ai and SoundHound AI are fascinating companies at the cutting edge of artificial intelligence. BigBear offers more stability with government ties and a strong backlog, while SoundHound is pushing into the massive voice AI market with explosive revenue growth. For investors today, BigBear looks like the safer pick. But for those willing to take a bigger gamble, SoundHound's potential can't be ignored. At the same time, don't forget about companies like Diebold Nixdorf and Recursion Pharmaceuticals. They may not have the hype of the smaller AI names, but their fundamentals and disruptive potential could allow them to surpass BigBear in the long run. In the end, the AI space is moving fast, and picking winners early is never easy. The key is balancing risk with potential and keeping an eye on which of these companies can prove that their technology translates into long-term, sustainable growth.